Are you wondering how much money should you put down for a house? I'm going to show you the best way to choose the right down payment amount. Hey, my name is Sean Ryan and I'm the broker of record at Blue Coast Realty. And I'm here to talk about one of the most important decisions that you'll make when buying a home, and is how much money should I put down as a down payment. 5% in Ontario is typically the minimal amount that you could put down on a home in Canada. It's also the amount that most people choose because it's the easiest to come up with. But just because it's the minimal doesn't mean sometimes it's the best option. The downside of putting down under 20% is that you'll have to pay a default mortgage insurance. This premium is generally added to the amount of the money you borrow for the mortgage. This insurance protects the lender in case you can't make your payments and they have to foreclose on the home, which would cause the lender to be at a loss. So it's basically like an extra layer of protection for them, and it will be a percentage of your home's value. While it can add several $1,000s onto your mortgage, many consider this a small price to pay for the bigger picture. This premium spread over the life of your mortgage is really insignificant when you think about it. That is to say, breaking into the housing market, starting to build equity, and not having your money going towards paying someone else's mortgage by paying rent is worthwhile by most people. If you put down more than 20%, you won't have to pay default insurance at all, which is a big upside. So, generally speaking, a bigger down payment will put you always in a better position. Your interest will be lower, you'll have more equity, which is always a good thing. However, there are some potential drawbacks to saving up for that larger down payment that you should be aware of before you're making that final decision. The first potential drawback is opportunity costs. We all know the saying about having all your eggs in one basket. By putting as much as possible towards your down payment, you could be missing out on other opportunities by tying all your money in your home up front. For example, you may miss out on filling up your TFSA or your RRSP and investing in those funds, getting compound interest, or having an emergency fund in place. There could be potential to earn more money with investments than you'd be paying in interest on your home. So what should you do? If you have the funds available and are comfortable doing so, putting down a larger down payment could help you save money on insurance, premiums, interest on the principal, and pay off your mortgage much faster. But make sure you're not sacrificing other important financial goals in the process, like saving for retirement or building that emergency fund. And most people who buy with a lower down payment end up being very happy with their decision. Being able to break into the housing market is a huge accomplishment, and much sooner. Give us a call today and we'd be happy to help you figure out the best decision for your future. Thanks for watching, and you know what? Welcome home to the Blue Coast.